Can you hear me? Let me know if you can hear me in the chat there. I'm just trying to get this thing smooth, like running smooth again, but the connection's a bit weird. Just type yes if you can hear me. Yes? Oh, sweet. Alright. Now I just gotta adjust the music volume as well. Hopefully that's alright. I can see the levels and it's... my voice is a little bit higher than the music. Let me just fix it a bit more. Maybe that's better. Yeah, that should be alright. What's up, buddy? What's up, Mo? What's up, Sean? Let's Mars. Philip. How you doing, boys and girls, if there's any girls? Yeah, it's been a while since I've streamed. Just thought I'd jump on and let everyone know that I'm still around. And still... I haven't stopped looking at the market, to tell you what. I've been trading a lot as well, so that's been fun. I just gotta fix up the elements in the stream here. 1 second. There's this thing. The streamer ticker thing. You know what? That's probably not even that relevant. I'm just gonna close it. And we'll just have the trading view and then that's it. That should be fine. The disclaimer, that can go, I can move that down to here. I can fix all that up in a different stream, that's fine. I'll just leave it as it is. So I'm trying to think, the last time I streamed was like late March, maybe? I'm gonna check, 1 second. If I go here, when I open this, it seems to break the connection. This other web browser, it seems to like slow things down. So I'm just gonna check. Hopefully it doesn't kill the stream. The 23rd of March was the last time I streamed. That was the funds rate decision of March. So March 23, let's mark that out on the chart. March 23. That was, okay. Here. So this drop. So right here, roughly. And let's discuss what's happened since then, because not a whole lot has happened, really. We've had some new highs, but I'm just going to make this brighter because I want to show when the last time I was on, just so we can sort of get it for reference. It was like, yeah, right here. Okay. What has happened? Look at that, we've gone sideways, more or less, right? There's been volatility within it, but you know, you haven't really missed much since the last time I was on with how my outlook for the market. All we've been doing is squeezing down towards some kind of apex right here. That's the apex. We've got CPI coming up next week, so that's like the next, you know, forecast, I think is no change to CPI. Like inflation, that the outlook is that there is actually no progress. It's just gone still and flat, which we don't want. We want to see progress to the downside. We want to see disinflation, so that these markets continue, you know, can get a clearer picture and continue doing what they were doing, which was recovering after the, you know, the really bleak 2022 bear market that we had. But look, let me, to give you perspective on what the hell's going on and why we had a bear market, I just want to go back to this. This is the inflation chart, United States inflation, year over year. So every time there's a data point that comes out, it's measured against last year. So it's year over year. performance or comparison. So if you can see each column here represents 1 year. So this is 2015, 2016, 2017, 2018. So for the most part, a lot of last decade was relatively stable and, around their target rate of 2%, which is where the white line is, right? We, thanks to COVID, which happened here, and then all of a sudden, the reaction to COVID caused this inflation spike that we haven't come up this high in inflation since 1981. So 40 years ago or so. And look, we've turned a corner. There's no doubt about it. That was the peak, right? We are now here on our way to this is the finish line. This is the target of 2%, right? This is my little drawing of a finish line. That is that's a solid effort to achieve that turnaround. I think in such a short period of time is excellent. They're getting what they want, and by they, I mean the Federal Reserve, right? The United States Federal Reserve. So interest rates, this is an interest rates chart. Interest rates are high and still high. They are back to the same level as they were in the GFC. Now, the GFC is the thing that birthed Bitcoin. The whole collapse, the global financial crisis is the reason Bitcoin exists. It was basically an answer to, getting unbanked, being your own bank with your money, that kind of thing. So anyway, interest rates haven't been this high since the GFC, it was leading up to the GFC. So this is what actually caused a lot of problems. Interest rates being this high caused all those subprime mortgages, and just the house of cards collapsed basically because the economy was really tightened up at this point. Just as we are right now, we've tightened up a lot, right? So similar environment, and look, it's a similar effect, except this time around it's not mortgages and things that are collapsing. It's small, independent banks, the small banks, the Silicon Valley Bank recently went through its drama, and it's due to the same formula. The same thing happened. When the Fed pushes things to a certain level, things start to break. If the interest rates are too high, things get tricky to run. So that's just a symptom of that. Now, at the most recent Fed meeting, they did talk of a pause, which is what this flat, you hit a target, right, and then you go flat for a period. That's a pause. So we may, at the next funds rate decision, we may see a pause before they start cutting, which is where you start getting a reduction in the interest rates, right? Now, because of things breaking, in the GFC, that's where this rapid cutting was happening, because they were like, shit, we've broken the system, we've broken the economy. We need to get that interest rate down and let things come back and get back on their feet. And that, so quantitative tightening is when the interest rate goes up, and then quantitative easing is to undo the damage caused by the tightening. So tightening and then loosening or easing, which is where they start, affecting the supply of the US dollar, stimulus comes out, that kind of shit. They come out with their band-aid solutions, and thus the cycle continues, doesn't it? It's a cyclical. You can see it's been cycling, the entire time the Fed's been around. It's cycles of ups and downs. So, don't freak out. It's not the end of the world. It's just part of a cycle. I think a lot of people still struggle with that concept that it's just cyclical. And they don't understand what caused the bear market and the fact that it's actually recovering right now. This is evidence. This is the primary reason we even had a bear market, was because of this inflation, right? There's your answer. There's no other reason. And look, we are coming back down. We're undoing the damage that high inflation caused because of the high interest rates. It's a necessary fix to bring this inflation back under control, right? Like their target's 2%. They're very clear about that. It's very simple. All right, so that's that. That's for me the fundamental primary reason things are happening the way they are. Like whether you're talking stock markets or crypto, it's the same shit. It's risk on assets. Crypto is just a more aggressive version of the stock market. It's very volatile. So coming back to Bitcoin, inflation has been coming down. It's allowed Bitcoin to come up and make a new high for the year. $31,000 we've come up to. We were dancing around, sub 18k levels after the FTX collapse, right? Back in November. Where's November? Back here. So yeah, like this was the trenches. Like people were freaking out and getting very bearish after FTX, and rightly so. It was pretty bleak. But I mean, look how far we've come in what, 1/4 of a year? Let me go to the 4-hour chart just to frame it all up. So yeah, if I go year to date, that pretty much puts all of this year on the chart. Just look at that. That's extreme. That is a huge case of recovery right there. It's blaringly obvious what's happening, right? You have lows getting higher. This was actually a curveball. Because this broke structure. We broke structure. We got lower than the previous low, and it caused panic enough for people to go back into that fear, capitulation type mindset. And then Silicon Valley Bank broke, and then this new narrative came out of nowhere that, oh shit, got to jump into crypto. Crypto's like a bit of a, let's weather the storm from this uncertainty of banks. And that's what happened. Crypto got picked up. It became a good idea again, right? You can see how crypto is very narrative sensitive. Like FTX collapse, people freak out. They don't want to touch it, right? They don't want to buy it. It's narrative driven. Brand new year, like fresh outlook, things started rallying up. We had a bunch of good CPI reports. We had, still hawkish tone from the Fed, and with rate increases, but they backed off on the aggressiveness because they were doing 75-point hikes, and then they went to a 50-point hike. Now we're dealing with just 25-point hikes increments. And now there's talk of a pause, like, them pausing altogether, which is them reaching, I'll put it in their words, sufficient restrictive, or being sufficiently restrictive to achieve their goal of getting inflation down to 2%. So, look, I think things are optimistic. We had GDP come out positive, so recession ain't gonna happen anytime soon. You need 2 consecutive quarters of negative growth, negative GDP, to consider it a recession. So, like the so-called experts are saying that there might be a mild recession later this year, which, hey, it could happen, but let's see, how the data pans out, and what comes of it. I'm not trying to say what will happen, but I'm just trying to say what needs to happen for a recession, for things to be classed as a recession. And we don't have that right now. So it's all just speculation. Even the professionals get it wrong. And, they peddle this narrative out, and, take it with a grain of salt, really. Because, with all the fear that's out there still about, recession coming, look at this. all the people that were just sitting on the sidelines have missed Bitcoin moving 88% up. That's not a small thing. That's a big achievement for Bitcoin, like something as massive as Bitcoin, right? Not to mention, like altcoins have been popping off lately, and I've been degen scalping them with some buddies, just for fun, you know. Like it's quick in and out. Just totally. It's not really trading. It's more like it's just scalping, catching momentum. It's a form of trading. I'll give it that. But it's not so heavily like calculated as like a swing trade or something like that. So yeah, it's just a different style, and it's not for everybody. But anyway, I'm gonna zoom in on the recent activity. Just to cut a long story short, what we're dealing with is a squeeze, right? We've got macro highs squeezing down, and then macro lows getting higher to squeeze up. So we've got ourselves a triangle, like we're working our way toward an apex. And there needs to be a resolution to this shape, like to this pattern. Like, are we going to bust out the top, you know, or are we going to fall out the bottom, which could happen too, right? There's still a reasonable scenario for back testing this level here, 25,000 as support, because we have not yet come to back test that SR level. That is our August high from back in June of last year, right? If you remember, after the Celsius collapse right here, we rallied back up. We tried to recover some of that move, but we could only achieve 25K. And that's, you know, and that's all she wrote, and she came back down again, right? And then FTX was here. But you can see the crashes got less severe as time went on because there's less liquidity left. There's less shaky money left. It's all just the foundation level type Bitcoin that was left at this stage. So driving it beyond that, you know, you're basically trying to pry Bitcoin out of people's hands that have held it and believe in it long term. Like, these are investors. They're not going to sell their Bitcoin for 20K or like 15,000. The smart, like the people that do that, the people that are flipping Bitcoin, they sold it up here when it was distributing. And like, this was your evidence, this macro high here being way lower than this high was, okay, the party's over. We're dealing with a bear market now, right? So the smart money was already out the door before all this happened, you know? So all this last little bit, this was probably like leverage shorting. So borrowing money from the exchanges to push Bitcoin further down, basically. Leverage shorting. Yeah, it's, things dry up. Bear markets don't go to zero. There is a level, there's a floor. We've seen that time and time again in cycles. Like, this was the most recent cycle. If I go log, oh, actually I don't need logarithmic. This was another bear market, right? It had a floor. There was a basement. It wasn't zero. It was, you know, $3,000. And, you know, the bar gets raised, or at least in the history of Bitcoin, each basement, each base level seems to raise up because more people believe in it from an investment perspective, right? Like they're holding it long term. They're not, and they're certainly not selling it in a bear market. They're not capitulating. If anything, they're buying more of it, right? This was an amazing accumulation opportunity, even through here, like even through late or mid to late last year, you know, prior to FTX falling down, that was all like reasonable accumulation zone. Just like I spoke about probably like 8 months ago, if you guys remember, if you guys were watching these streams that long ago, I was talking about zones. Like, there's a buy zone here, there would be a buy zone here, there would be a buy zone here, and it's all just accumulating in the bear. Like, and here we are. We're like, you would be back into profit if you had done that. And I actually did. I held a position that was stuck up here. I averaged down a little. I think I got it to like around 24 24K or something like that. And I was patient and I let it come back up. And, the only thing I regret was not buying more, like in the post FTX saga, right? But, I too got caught up in the fear and like yeah, you become a sucker. Like, it's very hard to counter what the market's thinking and what the media and like what YouTubers and everyone's sentiment is. It's hard to like go against the grain, and see the potential for what will happen or what is more likely to happen, and that was like some form of recovery, right? There was already evidence of a recovery back here because we had this low, right? And then we had these lows which were higher. So that was evidence. Oh, okay. And by the way, the S&P 500 was making new lows at this point. It was still on a decline, while Bitcoin was showing signs of some kind of stability prior to FTX falling over. So, if FTX didn't happen, if you just like sort of delete that event, maybe this point here connects to around this point, and this is the path that got delayed because of FTX. So that box that I just drew there was like a big old time delay, like you can see the basement that it created. New accumulation stepped in, and then bang, we're back. We've recovered the damage that was dealt, and then we started building from there. And we've almost recovered the Celsius crash. That's the Celsius one. This is the Terra Luna, I believe. Is this May of last year was Luna, and then we had June was Celsius, and then a whole bunch of other things were crashing and breaking through here as well, and then finally FTX over here. So yeah, I think there's still more to recover, to be honest. And what I might do is hide these lines just briefly and talk about something else that is relatively important, and that is a Fibonacci retracement from the all-time high to our current low. I'm going to say current low because, crazy things can happen. We may get a new low. We just don't know that. But if you're talking about likelihood, I think it's unlikely that we make new lows from here. But I don't want to be absolute about that, obviously, because wild things can happen. We saw that with the COVID drop, right? Things spiked back down to the same level almost. So you can get a retest of the floor, like it's not unheard of. Anyway, speaking about fib levels, these are the levels that we have to deal with as we try to recover back to the all-time high, right? That's the whole idea of a fib retracement, is to measure out like these points of interest. So from this perspective, like we've just kind of dealt with the 236, and arguably we still are dealing with it. Like we're still trying to establish position above it. And if I go back here and turn on my my moving averages. Yeah, this one with the MACD. I'll hide the MACD for now, and let me just hide the EMAs because I just want the moving averages. So we're above the 200 weekly simple moving average, and healthily above it, right? I think if you look at the EMA, and I'll hide the moving average, yeah, even the EMAs are happy. Like they have not death crossed actually. That death cross was averted for the EMAs, but for the moving averages, yes, there was a weekly death cross, and there is some indication that 50 weekly is starting to flatten out, and it may step back up and get and then golden cross, with the 200. We'll have to see. But the 200 weekly is very slight, like it moves very gradual. Like you can see its path is quite, stable. Whereas the 50 is a little bit more sensitive and in tune with price action. And that's why the weekly, it's a very lagged situation. So this death cross is reporting something that happened all the way back here. Like this, it's reporting on this scenario, this crash, right? So it's a lagging indicator, if you will. It just confirms what happened. I don't think you should pay too much attention to the weekly death cross. I think the daily is a little bit more in tune with what's happening because you get the signal a little earlier. So, you had your death cross back here, which would have got you out of Bitcoin before all of this tragedy right here, this bear market, right? And look, the golden cross put you into Bitcoin right here. Like we got the signal, the daily golden cross, bang, right there. Even if you bought there and you rode this drawdown, this brief drawdown, you'd be in a decent position. Like, you're up. So yeah, these moving averages on the daily I feel are more relevant and useful than any kind of weekly crossing. Um, Yeah, so that's like my macro outlook. We're still looking good. We're still very bullish. We're very much in a bull trend, arguably a bull market. This is how bull markets begin. Like it's a trend that turns into, like an actual like a market condition. Um, yeah, well, all of the evidence is right here in front of us. Like there's no question about it. Um, I just want to see on the weekly what the MACD is doing. Okay, so we had a MACD cross to the upside back here in, prior to FTX. This is what got me excited, I think. One of the elements that got me interested in beginning to accumulate was the fact that the MACD on the weekly had come down so low and was showing signs of regaining momentum to the upside. So MACD going up, price coming down, what does that tell you? That is divergence. That's bullish divergence. Bullish divergence on the weekly MACD, that was a big hint at what was to come. And yeah, look where we are now. We're up here. So bullish divergence. And yeah, like it hasn't done anything crazy yet, if you ask me. Like it's been amazing, like almost 100% up. But look, we haven't done anything like this yet. Look at these candles. Now that is euphoria. That's a bull market. That could potentially be yet to come. We may see that. It just needs the right environment. It needs the right setup from the economy, from the stock market. Like there's a lot of things that Bitcoin gets influenced by. So let me take a bit of a. I'm not a huge fractal guy, but if I go to the logarithmic view here on the weekly and just compare something. So if we're going to call this the FTX crash and then the basement and then the swift recovery, let's try to extrapolate that. And we have to keep in mind that this drop here was anomalous. It was an anomaly. Shout out to Jolt. That was an anomaly, right? It was a black swan event. No one really saw that crash coming until it happened. And then, it caused what it caused. And then we springed out of it. But, if the COVID crash never happened, maybe the bull market wouldn't have been the same way. There's so many elements to it. But anyway, the point is, let's try to use this as some kind of guide. Now we have to adjust its height, and we have to scale it to fit as best we can to what might be playing out here. It's probably something like that. So yes, if we do get some kind of black swan, I can see, maybe we have hit a high for the moment, and we do, maybe we are on track for some kind of pullback. If we don't get a COVID-19 black swan event, I can see, okay, let me get a different color. Maybe I'll go red or something. Okay, red. If we don't get a COVID-19, I can see maybe us retracing to 25k, finding support, picking up a whole bunch of demand, and then we start to rally into the later part of this year, and that's when we start, you know, potentially seeing a revisit to the all-time highs at the end of this year or even early next year, because we do have a halving as well early next year. So like late Q1, maybe early Q2, I think is the forecast for when the next halving is for Bitcoin. And that has in history shown to be like a bullish event factor for Bitcoin. And obviously with timing's another factor. Not only is price a bit of a, see, this is why fractals are a little bit sketchy, because it's like you can sort of just, you know, draw them out to fit your own hypothesis kind of thing. I'm not too heavy on the fractals myself, but at least it's like a thing that shows how Bitcoin can behave in the right environment. But look, maybe this ends up playing out something a bit more drawn out. Like maybe we don't see all-time highs until 2025, like something like this, right? Maybe it's something more like that. Does that look natural? Yeah, it kind of looks natural. It's a thing is though, it's a repeating fractal, and Bitcoin, like, let me go up to the Bitcoin index. This is my point with fractals, okay? How do I justify that a fractal from the past marries up perfectly with what happened in the future, right? Look, this one, let's take this as a fractal. It was, at the time, it was an all-time high, right? It had a bear market, like it had a pullback, a bear trend, and it recovered the trend. So, okay, that's cool. So we have to try and match. Okay, see, we've already got problems. It's not matching up. It's a time problem. You know, if we stretch it though, yeah, it almost somewhat matches up, but it's not perfect. Can you see the discrepancies? Like, it leaves there, there's a deviation there. It took time there. There was a dip that happened here that didn't happen this time. You know what I mean? Like there's discrepancies, but it rhymes. Like there's almost a rhythm to it. So I see like it's interesting to see and try and speculate with this tool, like as to what might happen. So if you take that and like try to marry it up with this one, it's like, okay, I need to match it. Okay, where the hell, if I'm using that as a fractal, why the hell didn't we go up to $500,000 like last year or the year before? You can see this it broke the fractal idea. It didn't quite line up. Like maybe, okay, then you can start arguing, oh, I'm gonna squeeze it to fit my fractal hypothesis. Oh yeah, it was supposed to be like that or like this. Okay, cool. All right, now let's bend and squeeze to get it to line up with this all-time high that we achieved, right? Bending and squeezing. See, this is where it gets a bit tricky because this was a double top all-time high. So it's like, where do you place it and how far do you stretch it? Yeah, see what I mean? Like it's a bit wishy-washy. Maybe something like that. But this is, and then this plays into the, oh yeah, it's not gonna do that because that's exponential, like, that's like, yeah, like exponential, like rapid growth. I think Bitcoin's gonna slow down. Like it's not gonna go explosive like it did in the early days, right? I think it'll still gain value, but it's gonna start to get a lot more stable the bigger it gets. Like it's not gonna do these rapid explosive moves, and that's what altcoins are for, right? Yeah. But that's my criticism, my critical thinking toward fractals. I don't know. I try not to get too hung up on fractals, and just because it happened in the past doesn't necessarily mean that's what's going to play out in the future, right? But yeah, I mean, I can see room for some kind of continual recovery of all of the damage that was done here and here, to the value of Bitcoin, given the right environment. And I think that environment is shaping up. I still respect people's opinion as to, oh yeah, I think, the bear's not over or something. Like, that's okay, fair enough. But why? Like, I want to know, like, what's the facts that's making you think that? It can't just be your sentiment. Like, it can't just be a gut feeling. I want to know, like, more so like an actual, give me a scenario why that has to happen. And no one's satisfied me with a reasonable scenario as to why we're going back below, 20 or, 18, 17K. Some people are calling for sub 10,000, which I think that's like, it's such a wild, like, guess. It's just a guess. Like, oh yeah, 10,000. Yeah, I don't know. If it happens, it happens, but I just don't think it will. My opinion. But anyway, sorry, I've kind of like just been rambling on here without reading the chat. Let me just catch up with that. What's up, Honest AF, Danny Boy, Frank Lee, D Johnny. Am I still building my wooden tower? Actually, it's still there, but I haven't been working on it. I've been busy working, actually. I work like 6 days a week. That's part of the reason, or big part of the reason why I haven't streamed for a long time. I've been busy. And also the fact that Bitcoin has been pretty much ranging for the last month and a half. Like we haven't really had too much activity to report. Like, I think things have pretty much stayed. Let me get these lines back. Yeah, we've been ranging the whole time. Like, there's been volatility within the range, but for the most part, we're still in this big rectangle. We kind of had a brief moment, out in the sun. Like, we managed to get up here, but then we head and shoulders our way back down to here. Like, yeah, here we are. We're still fighting to leave this area of consolidation. So right now, as we speak, Bitcoin is trying to reapproach $29,000. So that's cool. Interesting. You know what? The altcoins love it when Bitcoin doesn't know where it's supposed to be. Like, if Bitcoin's doing this, people get confident to go and play the altcoins because there's no, like, major macro change to what Bitcoin is doing. It's just holding value within a range, right? Like, so that's when your alts get a bit of love, and that's when you see the Bitcoin dominance start to get its own volatility, because people are moving out of Bitcoin into and playing alts, or bringing new money into the altcoins rather than straight into Bitcoin. So that's, yeah, dominance has a few things that push and pull and generate the figure that the Bitcoin dominance is, right? It's not just people leaving Bitcoin for altcoins. It's just liquidity coming into the market and going to alts rather than Bitcoin. Some of it is because it's leaving Bitcoin and going to, like, say, Ethereum or Tether or whatever, right? But yeah, there's lots of different factors as to the push and pull of Bitcoin dominance. What else we got in here? Which first, 32K or 25K BTC? If you ask me, I think there's a case for a 25K still. I think I'm gonna go out on a limb and say maybe this pattern doesn't quite work out and we actually fall out of it. And where's 25? 25's down here. Maybe we work our way down to 25. Like this is my like kind of bearish outlook. And then, you know, then we bounce off that and then rally and recover. And then we start attacking the 30s. That's the bearish sort of scenario. And then the bullish one is if the CPI data next week is great or like better than forecast, maybe we break out of this and get the ball rolling a lot sooner and not visit 25. You know, that's the bullish scenario. But yeah, I'm not so much about predicting what's going to happen. I want to react to this, to what breaks first, the resistance or the support of this triangle. And just see what happens at what the CPI result is and how the market reacts to it. Because, you know, you kind of need information to formulate a hypothesis on something. Just trying to keep it real, trying to be as measured as possible rather than just throwing darts at a wall and seeing what sticks, seeing what hits. Because predictions are cheap, right? Everyone throws predictions around. But yeah, I want to see reasoning behind predictions, you know? And I want some more reason to give out any kind of forecast. But hey, look, at the moment, I mean, the market is on the same page as me. Like, no one really knows. That's why we're stuck in the middle of this triangle, you know? The market is showing that no one freaking knows where we're going just yet. Until we break out of it, you know, until the decision is made by the market. Let the market show you. You don't have to show the market because you'll get wrecked. Yeah, the market will show us, and then let's just play into what the market shows, you know? That's what I think. Not financial advice. You do what you want to do. What else we got in here? Buddy says, I tripled my Solana bags after FTX. Oh, that's cool. Yeah, nice. Solana made a nice swift recovery after that because everyone was freaking out about Solana because of the whole Sam Bankman-Fried like investing in it or, you know, dealing with it. BTC bankrupt EOM, lol. Melon, okay, Melon's a bear. Do you also trade stocks or only crypto? Only crypto at the moment, yep. Bullish divergence, love it. This is wishful thinking, bro. Not really, I don't care if it goes up or down. I'm just here to trade the move. Like, if there's evidence of it crashing, I'll go short. I don't care, like, I don't care on the direction. A short is actually an invitation to go and buy the bottom again, you know? Do you think the market's really going to give everybody a second chance? Like, do you think we're going to get price to come down and crash to this zone? Do you think no one's going to be excited to buy it at 25? Or like, you know, 22 or 20? Dude, I think people are going to be lining up. If this thing corrects down, there's going to be a buy the dip. 'Cause just like this, look. We crashed to 20. By the, you know, have you heard of the acronym? By the, I don't need to say it, FD. By the F dip. By the fucking dip. Yeah, so if you get any kind of correction from here, dude, check out the fear and greed index. Fear and greed. What is the market, like what's the overall sentiment right now? Greed. We are excited to buy opportunity that comes and presents itself. Why didn't the market buy up excitedly here? Because we were freaking fear. We were extreme fear. Like, people were scared to dip their toes, and that's accumulating in extreme fear is what you have to do. That's where you buy. Like, that's it should have been blindingly obvious. It was the same here, look. Extreme fear. Extreme fear. Extreme fear. Buy the fear. Like, you know, that's when people are scared and capitulated. Oh, we're going to 10K. Oh, it's going to 8,000. Oh, Bitcoin's going to 0, you know. That's when you buy. When do you sell? Oh, Bitcoin's going to 1 million. Bitcoin's going to 100,000. Oh shit, Bitcoin this, Bitcoin that. Everyone, even their mums and dads, getting in on it. That is greed. That's euphoria. That's when you sell. That's when you should be distributing what you bought down here, right? It's cyclical, dude. So yeah, there's gonna be a distribution of the people that were smart enough to buy these accumulation zones, right? We've marked up. Have we, like, I understand the mentality that we've just come out of a bear market. Oh, we're still, we're still forming lower, like, oh, we're still in a lower low here. Like, this is, yeah, I understand. People are still like doubtful and fearful, and they hear of these so-called experts saying that there's going to be a recession. And but look, I mean, the proof is in the pudding. The proof is in the charts. You know, at the end of the day, stick to your guns. Have an exit strategy. That's the big lesson I learned from buying a massive position at the time here and not having an exit strategy, in case it didn't work out. But I held through it, and I did buy some along the way, but not as much as I should have. But anyway, that I did recover that position, but just it was a hell of a waste of time though, like sitting there waiting all of that time for recovery. So it was painful. This whole year was painful for a lot of people, I'm sure. A lot of people, this is their first market cycle, a lot of people. I know from our community, a lot of people didn't get involved in crypto until this part or even over here. And then they're seeing their first bear market. And this is potentially the start of a new bull market. And they don't know. They don't know what it's like. They haven't seen these phases. I mean, the charts tell you what it's like, what Bitcoin seems to do in these cycles, but a lot of people just don't like subscribing to that for some reason. Anyway, I think I've pretty much summed up my sentiment at the moment. I'm waiting to see how this triangle breaks and where the rally builds from it. If you held a gun to my head and I had to give you an answer of where I think things are going to go, I think we do correct down out of this, because next week's CPI shows that the forecast is that there's going to be no change to inflation, that it's just going to be stuck at 5%. For that report. So that's kind of bleak. That's not a good thing. It's just no progress. We want progress. Progress is what gets us bullish and gets markets moving, right? So stagnation, maybe even this. Maybe this could play out. Like we get more chop. Like, could you imagine how disappointing that would be? If we're just stuck at this range for another, 3 months or so. But yeah, we'll see. We will see. I'll try to jump on. I'm not committing to any schedule with streaming. I'll just jump in when I feel like it. Hopefully a bit more frequently, maybe once a week or just when I find the time. Especially if there's things to talk about. If there's not much to talk about, you won't hear from me. Unless you're in some of the discords that I jump into and frequent. But yeah, that pretty much wraps it up. That's all I wanted to talk about today. And yeah, all the best with your trading if you're trading. And if you're looking to do long-term plays, I would say wait until after the CPI report and then reassess. Maybe I'll do a stream after CPI and we'll see we'll see how the dust settles. All right. Thanks for tuning in, guys. I'll catch you on the next one and take care of yourselves. All right. See ya.